corporations, and other CSOs, one that lies at the intersection of our calls for tax and gender justice. It is women and marginalized sectors, after all, who bear the brunt and suffer the social and economic costs of regressive tax systems. Women and marginalized sectors also suffer disproportionately the worst impacts of profit shifting and illicit financial flows that result in a crisis of underfunding of public services, the devastating consequences of which we witnessed not too long ago during the COVID-19 pandemic. Women and marginalized communities suffer the worst impacts of global tax abuse by corporations and wealthy elites that directly affect governments' abilities to deliver climate commitments and human rights obligations. Thus, allow me to reiterate some of our calls for government's actions during these sessions of the INC, as expressed in written submissions by civil society and trade unions, including but not limited to the following. One, to follow through our government's commitments to pursue progressivity across fiscal systems and harness taxation as vital tool to tackle inequality, including gender inequality as expressed in the Sevilla document. This will require the integration of specific language across several relevant entry points in the Convention from the preamble principles, commitments, and others. Two, ensure that international tax cooperation enables strengthened capacities of governments to deliver increased and adequate financing of public goods, including essential services, to address the global crisis of care. Three, ensure that international tax cooperation enables strengthened capacities of governments to effectively deliver environmental protection, climate commitments, and human rights obligations. Let me end first with a note on history. 30 years ago, in 1995, a landmark resolution called the Beijing Declaration and Platform for Action was adopted by the United Nations at the end of the Fourth World Conference on Women that was attended by representatives of 189 countries, UN agencies, intergovernmental organizations, women's movements, and civil society organizations. The Beijing Declaration and Platform for Action has since been widely recognized as one of the most important reference documents on international commitments on gender equality and the blueprint for advancing women's rights. Together, governments, women's movements, civil society, and other stakeholders made history. Yesterday, as I looked around and listened to the Intergovernmental Negotiation Committee's deliberations, I was quite impressed by the number of women negotiators in the room. That would not have been possible many decades ago before the Beijing Declaration was inked. And indeed, there has been significant progress across the world in women's representation in public offices and spaces since Beijing. On the other hand, sadly, statistics across the world, especially after the COVID pandemic, still show that the Sustainable Development Goal on Gender Equality, or SDG 5, continues to be one of the most difficult goals to achieve across the world. Today, we see an intergovernmental negotiating committee for a UN Framework Convention on International Tax Cooperation intensely at work. You too, we too, are making history. We call on the negotiators to deliver a tax convention that will remain ambitious, one that could ultimately be used as a life-changing instrument, one that harnesses international tax cooperation towards the achievement of sustainable development in all its dimensions, and towards ending inequalities within countries and between countries. Thank you for this opportunity to be with you.
Thank you very much, Ginny, for this intervention. Thank you very much for taking the time to explain us and share us about the different process around since the process of FFFD and the commitments to involve this work for the taxation, for the mobilization, the domestic resource mobilization, the needed endorsement, the needed looking for the capacity for the different countries, particularly developing countries, and trying to organize the progressivity and support the different necessities of the developing countries, as I say, and also the different commitments also for to tackle the inequalities, including also the gender, to try to mobilize the gender equality and the systems of tax protection, and also the Beijing declaration, and platform for action, who incorporates the different commitments on also on gender and the blueprint for advancing for the women rights and the opportunity that we have also in the UN Tax Convention to try to mobilize these efforts also. And thank you very much also for the different actions also that from Asia have with the different organizations, social movement to try to mobilize all these effort at the demands of the social movement. So thank you very much, Jeannie, also for this intervention. And also, we will move to the next presentation. We have to Daisy, please. We have also around 7 minutes also for this intervention.
Sure, thank you so much. As rightly introduced, my name is Lutango Daisy Mwilima. I work with the Joint Country Program of the Norwegian Church Aid and Church Aid in Zambia. And I think in opening, I just want to clearly state that I think for most of us from Africa, the discussion on having an explicit commitment on taxation of extractives is very important. Because for a lot of African countries, including Zambia, whose GDP contribution from extractives is about 17%, the extractive sector is both a lifeline but also a liability or curse, whichever way really we can look at it based on different several reasons that I'm going to share later on. So it's important for us to have effective taxation of extractives in fossil fuels, minerals, etc. That has like clear and specific commitments. The Africa Group in the first session clearly state, and I quote, "The commitments in paragraph 10 of the terms of reference are not exhaustive enough and therefore should be expanded to cater for other pertinent subject areas. Taxation of extractives, among others, should be considered as an additional commitment." So in short, they're also asking for explicit inclusion of taxation of extractives. And I think it's important for me to mention at this point that we do not see taxation of extractives only as a technical tax rules issue, but also as a climate justice issue, as a human rights issue, and as a sustainable development issue. Beyond profit shifting in the current global tax regime, resource extraction has brought with it a lot of unique problems, and these problems have existed for a very long time, since the colonial era. And some of these include undervaluation of resources, opaque multinational contracts, neglect of community rights, and severe environmental harm. And the current global shift or push for critical raw materials in the energy transition risks repeating these injustices as we continue to see powerful northern actors continue to dominate supply chains and decision-making processes, sidelining the rights and voices of indigenous people and affected communities. The extractive sector really generates vital foreign exchange for African countries. We can't dispute that. But we don't see those fiscal benefits going down to the local people, especially the mining host communities. And what we do get in excess, though, that we see that a lot of the communities that surround mining areas get is environmental destruction and the social toll on the communities, which are continuing at a very alarming rate. Recently, in Zambia, a tailing dam collapsed. I think that was February or January, discharging affluent heavy base metals into the Kafue River, which is literally like the lifeline of the country, where we get our drinking water, and that led to a lot of destruction from aqua and marine life to agricultural produce that lines the river literally. We don't know to what extent human health and livelihoods have been affected. Right now, there's a consultant going around to just like ascertain what that needs to do, what that looks like. But in the next 5 years, we'll be seeing a lot of people getting sick because we do not know to what extent health of the people have been affected. We don't know how long it took from the time the tailing dam collapsed to the time that it was announced, because people continue to drink water from the river, people continue to eat the fish. So there's so much that we expect in terms of liability going forward. And that will lead to several court cases to try and establish how much compensation should be given in terms of the health that has been destroyed, and so on and so forth. And generally, really, we see very minimal corporate accountability when such things happen. So communities just continue to bear the cost of extraction within our localities, especially women and girls who face literally like most of the negative externalities when some of these things do happen within our areas. I think another important thing to mention is, as it stands, the extractive industry sector is particularly prone to illicit financial flows. Literally half of the US dollars, the 84 billion US dollars that's lost from Africa annually, comes from the mining industry alone. That's revenue that could literally help reduce inequality, that could literally help finance sustainable development goals, that could literally help finance health and education and a lot of different things. Quoting from the 2022-2023 Commitment to Reducing Inequality report, this is more than the annual health financing gap, twice the needs of the education financing gap, and it is almost equal to the amount Africa receives in remittances each year. And just before I head to our recommendations, Oxfam did a study in Zambia around 2020 on Mopani copper mines, which is owned by Glencore, which was owned by Glencore at the time. And the study really did expose a lot of profit shifting from undervaluing copper exports to their Swiss parent company. I think that study is public, you can find it anywhere. And overvaluing imports to shrink taxable profits within Zambia. This on its own deprived the country of hundreds of millions of dollars that could have restored the environment, or built schools, improved hospitals, and so on and so forth. So looking at all these different aspects, that's why it's important for us that the taxation of extractives stays as a clear, specific commitment, so that we can benefit, but also we can try and help to restore the environment, we can try and help to restore human rights, and the lives of the people that live around these investments. To address this, the following are recommendations: that tax cooperation on extractives and environment challenges should, one, cover excessive tax incentives and negotiate unfair treaties and tax agreements. Secondly, require companies to cover all rehabilitation and restoration costs and meet the needs of affected communities. Protect the rights of workers, women, children, and rural and indigenous communities. Prioritize source-based taxation so that profits are taxed where resources are extracted. So this would include adopting rules on the taxation of cross-border services, making sure that taxing rights on services relating to extractive industries respect the nexus of the place of extraction, so that the profits related to these services are primarily taxable in the countries where the extraction takes place. Mandate full transparency, that is full disclosure regarding contracts, beneficial ownership, commodities, revenues, tax payments, and the level of economic activity in all countries of operation by public country-by-country reporting. Address transfer mispricing in the extractive sector by replacing the arm's length principle with unitary taxation and formula apportionment based on assets, sales, and headcount of employees. And apply a surtax on polluting industries' profits to make sure that those who destroy nature pay for its restoration. In conclusion, I would just like to reiterate my earlier statement that taxing extractives, especially for Africa, is not only a revenue issue, it's a moral issue, it's an environmental issue, and it's a human rights issue. Thank you.
Thank you very much, Daisy. for this intervention. It was very inspiring to hear about the different problematics around the extractive industries also, and the different affections also for the environment, for the communities around the communities, and also how this generates the losses of the revenues for the countries, given the different aspects involved, as the tax incentives and the illicit financial flows, the evasion, the tax elusion, and etc. And thank you very much also for the different recommendations that you bring us in terms of transparency for this sector. So, and in order to try to mobilize the efforts for the different countries that are involved in this process. And with this, thank you very much, Daisy. We will move to the next presentation. So I will bring the floor to Tobe, please.
Thank you so much, Louis, and thank you everyone for coming. We have been bringing up the Sevilla outcome document for the last 10 days. It was negotiated a little over a month ago. A lot of it was negotiated in this building. And we're being told by negotiators that the language in that document cannot be transferred to the exercise we're doing here, the UN Tax Convention. Because apparently that document is not binding, that's true. But we're even getting some sort of story that it was agreed with the unwritten agreement that, of course, all that's not going to happen. And that's not, that's a rare level of honesty from negotiators. It's very true that legally binding agreements are different from the Sevilla outcome document, but when our governments get together and negotiate an outcome document that has very, very specific commitments, surely we can trust our governments and politicians to stand by that. And if we read the Sevilla outcome document, they were surprisingly clear. And it actually says nowhere that the following shall not actually be implemented. It's quite strong, but non-binding language. So the first exercise here is to take those commitments and translate them into a legally binding document. The second thing is we do agree that legally binding documents and conventions and protocols, that they do need more than what political declarations need. And one of the tasks I have today is to talk a bit about, okay, what more in the convention? What comes ahead now? We started off with translating the commitments that are listed in the terms of reference into real commitment language, because we've been given a task, a to-do list, by the UN General Assembly. Now we need to translate that into the commitments that go into the convention. We agree, that's a very good place to start. But there's a lot more in that convention that we need to work on. We have in the terms of reference a very strong, clear and elaborated objective. But from there into an actual convention, there are a lot more components that we need to think about. One thing we've been bringing up is mechanisms. This word has the luxury of being very broad. Mechanisms within UN conventions really span a very long range. To mention one type of mechanism, it's often known as a clearinghouse mechanism. It basically is a way of ensuring that there is information exchange between the parties to the convention, between the governments. Obviously, I think most in this room knows that that's highly relevant for tax. It can also be a clearinghouse mechanism that ensures that there is exchange of information between the governments and the public. So setting up different types of mechanisms to deal with the transparency elements, that seems important to consider. And when we go back to the Sevilla outcome document, we will see that actually our governments were quite specific on this. We were positively surprised to see that they started talking about a central public register of country-by-country reports. Why are we so interested in these country-by-country reports? Well, it's because you see in the room when we negotiate corporate tax, you see some governments saying, we need more analysis of what the impacts are. We agree. But we don't need more reports with the same bad data as we have today. As long as it's secret how much companies actually pay in tax and where they do business, we don't need more reports about that. If we get the country-by-country reports, then we can actually see in much more detail what the impacts of different tax rules would be. So this is very important, and this is a mechanism that, in our view, should be set up very early because it is so important for informing everything else that the convention does. The word public is also, of course, extremely central. So that would be one potential mechanism under the convention. If we have that mechanism, meaning that the convention will provide this information to the public, someone also needs to send the information to the mechanism. So the mechanisms are linked to activities of setting up institutions or developing rules, or in this example, we would need the governments to commit to ensuring that that information comes in, either through reporting from governments or by introducing national level legislation saying that multinational companies should provide this information to the mechanism. And before you say, well, but this is not in line with the OECD agreement and country-by-country reporting should not be public, long story short, it already exists in the EU. So there is a very simple way of doing that. So that's one example. Similarly, another transparency mechanism that we've heard come up a bit in the discussion is a global asset registry. What is the purpose of the asset registry? Well, you can't introduce a wealth tax unless you know who has what wealth. This is not the same as the public country-by-country reports. It's not to say that all this should be public. There are sensitive types of information that should not be public. At the same time, though, when it comes to elements such as secret shell companies, we know that these are being abused to hide wealth. So there is a complex discussion about the global asset registry and which elements should be in the public domain and which should not. But the point we want to stress is that a global asset registry, where else would we do it if not in the UN Framework Convention? Another example is when we look at the elements of sustainable development and the UN Tax Convention. We have received the question these last 10 days, well, you say you want sustainable development in the convention, but how would you do it? And to that we answer, no, actually you said you want sustainable development in because you, the member states, adopted a mandate for yourself where you said you're going to set up an international tax system for sustainable development. So how do we do that? There are different ways of doing it. One is to link back to all the other things that have been decided in this House. The Sevilla document is just one example. There are many other commitments to making sure that issues such as environmental protection, development, public services, gender equality, that is financed. It's very true that in a UN convention, you cannot start overstepping the role of national parliaments and micromanaging how countries spend money. But you can pick up on all the other documents that have already been adopted in this House and where governments have made clear commitments to ensuring that certain things are financed. You can, in the UN Tax Convention, link straight to that, and again, you can also start considering reporting requirements, where governments make it clear how they are ensuring that their tax systems and fiscal systems are in line with sustainable development. And the last, on the environment and sustainable development, the last type of mechanism, when you say it to tax people, they seem very surprised, but you can discuss international tax initiatives. And if we had more climate people in the room, it would be easier because they would know that already in 1997, they adopted the Kyoto Protocol, which includes the share of proceeds, as it's called. It is a type of international tax on the clean development mechanism. This has been a funding source for the UN's adaptation fund for a very long time. It was adopted in 1997. You can go to the Biodiversity Convention and see that they just adopted a proposal for a Kali fund, which again is an international type of tax.
The Bali action. Well, like the UNFCCC has different mechanisms that may be
We'll
useful
take
to
the
consider
discussion.
to. Yeah, no, because she.
No,
paused,
thank you. Yes,
because I
that,
was
that is my
speaking.
point exactly. So it's just to say that ahead of us lies a very important discussion about mechanisms, about reporting requirements, and it's also linked to the issue of institutions. Global Asset Registry, subsidiary bodies, the role of the expert committee that we have already. And the last point I just want to throw into the discussion about things we need to talk about going forward is the issue of, we're talking now about disputes. How do we settle disputes between the parties to the convention? But there is another elephant in the room, which is how will the convention's parties deal with countries that do not sign on? Maybe we can call them non-cooperative jurisdictions. What we have on tax is an absurd situation that governments have been extremely harsh on each other when it comes to tax. They blacklist each other, they threaten each other, they put tax on each other's banks, they use trade measures. We actually have an area where people or governments use very harsh tools. And yet we've never had a clear international agreement on what bad and good behavior is. But as we see the UN Convention coming together, it's an important question. How will the countries that have committed to working together under this convention, how will they make sure that there are not non-cooperative jurisdictions that undermine everything we're trying to do here, including the effort to create an international tax system for sustainable development? Thank you.
Thank you very much, Victoria, for this capacity of synthesis of all of this hard work that that we have facing the process of negotiations and enrichment of the UN Tax Convention process. Also, a key element that you raised was the topic of the transparency, the process. And as you say, the needed and relevance of the transparency is one of the main arguments that the idea also for the public. For example, a central element in the tax policies in the CBCR, automatic exchange information, GAR, DIO, etc. No? And also the mandate that have the states also is necessary. The fulfillment of this mandate that we have, and to ensure the gender equalities, the funding for the climate, the social protection, and all these elements be financed. Yes, and this is a very important process that we need to ensure inside of the UN Tax Convention. Thank you very much, Tove. So we will continue. We will have our last presentation, but just to say that we will have then of the presentation of Enrique that we will be next. We will have some minutes also for the discussion, questions, and ideas that we would like to share in this room. So with this, Enrique, I will give you the floor, please. Also, we have around 10 minutes.
Thank you very much, Luis. And before I get started, I just wanted to say that all the presentations have been very good. So it's a very hard, level to follow up. And also, what I'm going to discuss here, which is basically the current transfer pricing system and the arm's length standard. It follows up a little bit on the presentation that Daisy made, and that is basically the fact that my personal feeling, and also from other colleagues from civil society organizations, is that the discussions we are having here, they are all necessarily starting from the point of let's maintain the current transfer pricing system, let's maintain the arm's length standard. And our feeling is that this is really a missed opportunity. We are here, and all of the countries present here, exactly with the opportunity to imagine and think of different systems that can work better. And it's very important to look at what we have currently and ask if this is proper and if this is functioning properly. So before, of course, we get into it, let's just make sure we're all on the same page. When we're talking about the transfer pricing system, we're talking, of course, about the separate entity approach, which is this legal fiction, basically, that means that for tax purposes, instead of looking at one multinational enterprise as a single entity, we consider all of their different subsidiaries as separate entities that are able to transact with each other. And this, of course, creates a big issue. Once, if you have what we call an open market transaction, that two different entities will engage and will try to reach a specific agreement on prices and conditions, what you have is basically two different entities that are trying to achieve the best outcome for their own purposes. And this is exactly what derives a proper price, a proper transaction. When we are looking, of course, into an intra-group transaction, so a transaction between two entities that belong to the same group, we lose that aspect, and you don't have two different interests being considered, but you have transactions that are being, let's say, priced and regulated based on the interests of the group as a whole. And it's important to have in mind we're not talking about a small issue on the corporate tax system. What we call those intra-group transactions, they account for more than a third of all global transactions. So the issue of how those intra-group transactions are actually regulated has a huge impact on all countries, really. What we have right now, based on the arm's length standard, is the idea of multinational enterprises trying to find on the open market a comparable transition that they can bring and use that price to price their own transaction. As we're gonna see here, this is has very questionable success and has led to rampant abuse by multinational corporations and loss of tax revenues. And I think it's also reasonable to say that as the global economy gets more complex and you have also particularly more transactions around intangibles and other hard to value transactions, this situation seems to be getting worse and more complex. So when we think about the arm's length standard and the separate entity approach, we really just need to recognize that there is this legal fiction at the core of the current transfer pricing system. And while, of course, there are interesting initiatives to try to improve the situation, it's hard that small changes on specific methods or specific issues will be able to revert this, let's say, this negative experiment, exactly because the issue lies at the core of the system. Basically, our view is that multinational corporations, they cannot be compared with, let's say, regular single entities, or that those intra-group transactions cannot be compared with open market transactions. And that is basically because multinational corporations are not the same as smaller organizations. They have issues such as economies of scale, or they have shared functions between entities, and they have what we call those integration synergies that just make it not possible to have a realistic comparison between those transactions and open market transactions. And what we currently have is basically what we consider to be an unfit system. And this unfit system, it allows multinationals to have, let's say, abusive or aggressive tax planning. This has created a number of huge, complex corporate structures or transactions that don't have any real economic purpose. What we're seeing here in the end is that profit today is allocated on the end within multinational enterprises based on tax reasons and not based on where real economic activities actually take place. So, and this is also an important issue here. This is not global north, global south divide. Global north countries suffer from this issue just as much. What we normally see is that, of course, global south countries, they are more reliant on corporate income revenue, so this has a bigger effect to them. But this is not an issue that only impacts southern countries. Another issue that we are seeing, and this goes back to the complexity and how this issue seems to be getting more out of hand, I would say, is what we call the intangibles. So when we're talking about intellectual property, when we're talking about other forms of intangible assets, they are recognized as hard to value intangibles. That is because there are no clear comparisons to be made. So, for example, when a digital company develops a very complex algorithm, how is it possible that a tax administration can look and say, this should be compared to this specific, other transaction? Because those are really unique transactions, those are unique assets that are, again, developed based on those shared functions and other facilities that multinational companies have. On the other side, it's important to keep in mind, especially if we're thinking of global south countries, but again, also impacting northern countries, is that on tax administrations across the world, there is limited capacity on this. It's not rare to see a tax administration that has specific staff that gets trained and gets more experience on this topic just so they are hired away to a consultancy company. So there is always this issue of tax administrations losing their most expertise staff, and also the very high cost that this system generates. So who really benefits from the current system? We could say, of course, multinational corporations, because they have this flexibility and they have this ability to determine where their profits will eventually end up. But also, of course, legal advisors and consultants that are also, let's say, very favored by the system, as it is a high income activity. And then I think also it's interesting to keep in mind, talking with a lot of people that work on organizations that support the arm's length standard. Most of the times they will recognize, yes, the arm's length standard has issues, and we want to improve it, but there seems to be, they stop one step short of looking for alternatives. And what civil society has been pushing for a long time is, of course, the idea of unitary taxation. So what we're talking here is about looking at a multinational corporation and seeing it as one single entity. That the fact that two entities that belong to the same group, but based in different countries, they are not separate entities, but they belong exactly to this unique group. This is what we could call the single entity approach. And if you look into a number of countries, so for example, the United States, Canada, Switzerland, or China, that system or that approach is already used, let's say, from a domestic perspective to share revenue among subnational entities. So we're not talking about something entirely new. And also important to keep in mind that the European Union has been for some time considering a similar approach. So the idea of a unitary taxation where the revenue would be allocated based on a formula, we feel that by not addressing or not seriously considering this and going straight into the current system and the current transfer pricing system, these the sessions are really missing an opportunity to consider something more interesting and that works better. Thank you very much.
Thank you very much, Enrique, for this overview about how the system is working around also the maintaining of the system of the transfer pricing and the standard of the arm's length principle also, and the necessity to also try to mobilize efforts to with the idea of having unitary taxation and a formulary approach that to try to improve or resolve or giving better tools in order to also recovering important resources for the financing of the governments. and also the necessity to also the taxation of the no a separate units of the same global corporation. No, the idea is the taxations over all the system and all the entities that this corporation has. And also for bringing us also the limitation of the capacities also in the tax administrations and the needs of experience and another regulation that we have to still maintain and put our views on this in this process. And you say it's not the idea not try to divide the northern block of the south because this problematic affect us and but also more for in the dialogue between countries also. But thank you very much also for all this presentation and also for all the presentations that we have here today. So now we have around 30 minutes for a discussion, for the interventions. Maybe I will recommend that we have a first round of intervention, maybe 3 or 4, and then we will bring the word to the panelists. And if we have more time, maybe we can make another round of interventions if you agree. Okay, I have one question there, please. Can you?
I don't know. Oh yeah. Okay, cool. It's actually more a comment than a question. I just wanted to first thank all the panelists.
Sorry, could you introduce yourself?
Yeah, of course. So my name is Clara Thompson. I work for Greenpeace International. And I wanted to thank all the panelists for that really interesting summary as well of what's been going on and the reflections. So I just wanted to add one point to what Jeannie and Tove were pointing out about the connection between sustainable development and tax, because I think it's a key point. One figure I find really shocking is how much money we're losing every day to multinational corporations and wealthy individuals due to tax evasion and them putting the money in tax havens. So I think I'm really hoping that we can agree that there is a clear problem and we're losing out of this money, and it seems quite unfair that those who are actually contributing most to the climate crisis are contributing least to the solution. So just to make that point that it shouldn't be the ordinary taxpayer who comes up for that, for those resources, but it should be those who pollute the most. So just to reiterate, I really think this UN Tax Convention has a huge potential to fix that. And and because of that, I think it's so important that we find clear language in the final convention text that gives us a mandate to act on this. So I feel like it's going already in that direction. We have workstream issues note paragraph 18 that invites the committee to explore additional resources for sustainable development. We also have paragraphs 2 and 10C of the 2R that indicate that the framework should help close the significant financing gap of sustainable development goals and other international agreements. But I do think that we have to go further for that language. So to be very clear that this commitment should that we need to tax high net worth individuals for the reduction of disparities within and between countries, and that there is a clear priority of that to go towards sustainable development goals. I also think that we need some kind of mechanisms to basically, we need a additional commitment that actually addresses environmental taxation, because it's also polluting corporations. So I just wanted to add to that as an additional perspective, but thank you so much for that.
Thank you. Another intervention? Oh, there it is.
Thank you very much. My name is Leretia. I'm from the Global Alliance for Tax Justice. This transfer pricing and arm's length principle, when we started the tax justice campaign in Africa, we used an action aid study on Sam Miller International in Ghana, which showed us legally Sam Miller International was shifting profit that in Ghana, street vendors of beer paid more taxes than the multinational. That is a campaign with which we broke our teeth. Now, my question is really, the whole function of the UN Tax Convention is to change international tax rules. Anything that leaves a trace of transfer pricing is not going to change international tax rules. It is incompatible. I remember when at the third FFD conference we had, as Global Alliance, we had organized a panel discussion with Pascal Santaman from OECD and Joseph Stiglitz from ECRIT at the time, and they say, you are trying to fix something that can never be fixed. So now, when I'm reading this, what I'm asking is, there is a lot of talk here about broader consensus, agreement, and what. So the problem of Pillar 1 was to do 10% concession to unitary taxation and keep it 90% intact. If we get now 50% concession to unitary taxation and 50%, we are going to be there. So what are really, because consensus or compromise means really to bring the whole thing to the interest of secrecy jurisdictions and tax havens. To make it the least common denominator, you end up without changing anything. So what is being brewed here? Because you don't see a rejection of transfer pricing mechanisms outright, and there is a sort of compromise being sought. What can that compromise look like without compromising the purpose of the UN Tax Convention? Thank you.
Thank you very much, Lereje. I find someone raised their hands. No? For another intervention. Okay, please.
Hi everyone. Can you hear me? I'm George, 31 years old, originally from Mexico, currently the advocacy officer in Agora, an NGO promoting innovative policies centered in peace and social justice. I just wanted to know if there's a specific proposal about the illicit financial flows, like how can we tackle the issue if we know that the protocols focus on more topics and not necessarily on illicit financial flows? And also, has anyone considered how to, like, what's the proposal with the fees and the subsidies? You know, like, what are we envisioning in the global tax system about fees and subsidies? Like, fees can be used to tackle illicit financial flows because we would be imposing certain tax when companies don't disclose if their activities are being implemented in a bona fide way or not. Like considering the UN principles and the objectives that they follow. And that's about the fees. No? And we have two types of fees mentioned in the work streams, the technical and management fees. So clarification about the proposal by civil society on the fees would be amazing. It would be amazing to have clarification on that. And also the subsidies, like how are we ensuring that companies don't divest, incur in divestment through subsidies, right? Because they can be eligible for subsidies and then don't pay taxes based on the subsidies being awarded by the global system or the country. Thank you.
Thank you very much. Maybe we're going to receive one last question. Yes, please.
Yeah. Hey, my question is to Enrique about transfer pricing. It is acknowledged that transfer pricing is not perfect and there are issues within that. And we are suggesting alternative method of unitary taxation. This is, to my mind, is a broad concept. Now, how are we going to apply it to MNEs who are in presence in several countries, to tax them as a group, and then how do you divide the revenue among the countries? So, if you have created some thought paper around this, we'll be happy to read and, give any comments on that. Thank you.
Thank you very much. So with this, maybe we can return to the panel. We have some specific questions around the transfer pricing system, but others also for the panelists. And maybe we can start in the opposite way. Or you, Enrique, would you like to start?
Sure.
Maybe some
Thanks,
questions?
yeah. And thank you very much for the question. I think when we talk about let's say a unitary taxation system, it's yeah. So in the same terms that you were mentioning, right? We're looking at a multinational company that has activities in a number of jurisdictions, and the idea is really to you consider the let's say the global activities of that company. That would of course also remove the issue of intra-group transactions. And then in the end, of course, is the issue about the formula, right? The formulary allocation, basically the idea of developing a specific formula that will divide that profit between the jurisdictions. Normally, what we see the experience in most countries, and I think most studies or most organizations, when they think about a formula normally they consider assets, they consider also sales, they consider, for example, staff issues. So there are, I would say, some specific economic elements that are broadly considered to be within a formula. There's always, of course, the issue of how they will be balanced. I think it's interesting to look into the experience here in the United States, again, into how taxes are divided within the states. There are a lot of different experiments and different approaches to it. But of course, this is not a simple, let's say, a simple reform that will be made. But again, just the issue of having that conversation started. And of course, we would be glad to share some studies or some reading material on that, of course. And getting back to your comment there, Jay, I think it's interesting. We have heard, I think particularly today, some comments talking a little bit about unitary taxation or formulary apportionment, particularly from Kenya and from ATAF, if I'm not mistaken. But as you just said now, they seem to be, let's say, always put as in a secondary position to transfer pricing. So they are there, to auxiliate on specific issues that may seem, transfer pricing cannot fix this. So we will bring formulary apportionment here just for this very specific issue. So right now, what seems to have been discussed, at least during the sessions, is something really specific for Protocol 1 and not looking at a broader reform that we feel would be necessary. So I agree with you, it seems to be, at least till right now in the open sessions, that this is being seen as possibly to fix one or two specific issues, but without touching the broader structure, which I feel, of course, it's a missed opportunity. Yeah.
Yes, I think in relation to illicit financial flows and this discussion about what more protocols can come up, one very strong urge we have is let's not believe that every new topic needs a new protocol. Every time we set up a protocol, we set up a separate governance structure, we set up a separate group of parties. If you look at for example, the Biodiversity Convention, when they have a meeting, they have the conference of the parties under the convention, and then they have several protocols running in parallel. You can see it's already now with 3 work streams and 2 early imagine that growing. I think it's very important that we take it seriously when we have in the mandate the order that we need to try and create a coherent global tax system.
With what we have.
So, and the illicit financial flows, it's within paragraph 10. So there is a commitment there that needs to be translated. It is relevant to a lot of the issues that we're talking about. Illicit financial flows, it includes large-scale corporate tax avoidance. So the discussion about what are these rules that allows large-scale corporate tax avoidance, it's relevant.
Yeah.
And also on the transparency side, it's extremely important for fighting illicit financial flows. Related to that, we also have this discussion about should it be high level or low level. It doesn't make sense until we need to start at what do we need to do the job. The job is the terms of reference. And we need to be sufficiently clear in what we produce here. Usually, if you look at UN conventions, think around 25 pages. Don't think OECD. It's amazing how the OECD sends out draft, because they're often not adopted, but draft legally binding agreements of several hundred pages. Super detailed. It's a very strange way of working in my view. The way that the UN usually does it is you provide a clear mandate, you provide a clear agreement. It's not so high level that we will spend the next 10 years discussing what it meant. We need to be clear about how we're going to solve the task that we got in the terms of reference, and then we give a mandate to the COP. One example on the corporate tax system is we have the job, we should ensure that multinational corporations are equitably taxed. I think the claim we're coming with is as long as you keep the transfer pricing system, that is not going to work out. So that's how we arrive at the need for a new tax system. And then one way to solve it is let's get as far as we can in the next 2 years.
And then we'll see.
We suggest a unitary taxation with formulary apportionment, and that can be the convention saying this transition needs to happen. And then the conference of the parties can get the job. So the convention says the conference of the parties must follow up and develop the rules that go with this new system, including an allocation formula. When it's a COP decision, it's also easier to have a periodic review because it's much more difficult to do an amendment to a convention. A COP can actually make a decision to change another COP decision. So that would be a way of solving the task and making sure that we have a clear path forward. It's very normal for COPs to be the place where you agree the rule book, the hundreds of pages and the details. So that's it. I don't know if that's high or low level, but basically that's a system of governance that has been successful in many other areas. So that's also our suggestion here.
Thank you, Toge. And
Thank you. I think just to reinforce some of Toge's point regarding the illicit financial flows, I think it's very, very important for us to provide a very clear mandate for the COP to establish a mechanism to not only track, but trace and also stop tax-related illicit financial flows. I think it's important for us to think about illicit financial flows as a cross-cutting issue to the framework and the protocols, and not necessarily something strictly related to taxation of extractives, for example. So yeah, and also just to reiterate, I think a point which I think Tove also mentioned, that we do need to replace the complex transfer pricing mechanism with unitary taxation and formulary apportionment. Thank you.
Just very quickly on the point about taxing high net worth individuals, and thank you for bringing that up. That's really an important point for us also, a major part of our advocacy for tax justice, whether it's in the UN Tax Convention or in our advocacies for national tax systems. So, secondly, also on tax and environment for my organization, Asian People's Movement on Debt and Development, is very high also in our agenda. Thank you, Daisy, for your points. And the principle of making polluters pay is a principle that should really permeate and anchor all our advocacies, including for tax justice.
thank you very much, Ini, and all the panel. We have exactly 10 minutes and the finalization of this session. So one last brief asking questions. Yeah, please.
Thank you. I don't have a question. My name is Nelson Kisare. I'm a bishop of the church in Tanzania, but also the chair of the Interfaith Standing Committee on Economic Justice and Integrity. Thank you, the presenters, for a articulated presentation. I was looking at the SDG number 1, which talks about the eradication of extreme poverty. in the world. So if I look on the one side, there is a move to eradicate extreme poverty. But on the other hand, you look at the gap between the rich and the poor is widening. Why? That means there are certain things which need to be fixed. If you look at the global tax system, it's not addressing the extreme poverty. On one side, we're talking about how can we eradicate extreme poverty, but on the other hand, we stimulate things which are still widening the gap between the rich and the poor. Daisy, you have talked about the possibility of taxing the extractive industries. Yes, it is true. Because if you look at the resources which has been endowed to the world by God, I'm a minister, so I'm talking about what God has endowed to human being, the resources which are supposed to help the human being for betterment of their life. The depletion of resources is not even taking into consideration the next generation. We think we're only going to live today and there is no life in future. So taxation is the only way, I think, which can really reduce the amount of extraction which is going to deplete the resources. So I think it is imperative, so we continue to do the advocacy on how we can harmonize the global tax system, which is fair, which is just, and which also takes into consideration the future generation. Just a comment.
Thank you very much. And I think we will take one last question or comment, please.
Thank you, Chair. Mine is just an addition on the aspect of sustainability and the extractive sector. To me, I think what we are trying to look at taxation of the extractive sector is on the aspect of even sustainability in the way that we have agreed, like we have for instance, in Africa, we have the Africa Mining Vision, which requires for the mineral beneficiation. And this is not only on the aspect of taxation, but on the aspect of sustainability in one way or the other. You find that we are losing out when it comes to commodities, when it comes to minerals that are extracted from our grounds, in the way that there is no value added. And that means you are selling out jobs, you are selling out the taxes which you could have got in terms of the added value on the minerals, but also even on the industrial development. So you find that when it comes to industrialization, when it comes to extractive sector and sustainability, it goes beyond even the revenue, but also even the chain which we have failed to recognize. The other one is on the EITI. Most of the countries are members of the EITI, but you find that there are contradictions. There are some provisions within the EITI which does not consider, doesn't put into consideration of the needs of some countries because they are more of international requirements. And you find that in one way or the other, you cannot compare and contrast because the documents that are required within the EITI, they are more considering the country or the government and the company, but it doesn't consider the outside information. So you find that while even when you're trying to tackle the issue of illicit financial flows in the information sharing beyond the government and company, that one you cannot address it under the extractive sector. So to me, I think when it comes to the extractive sector, taxation and other related or sustainable development, we have to look at it holistically beyond the aspect of only revenue, but also even other value chain benefits that can accrue from the extractive sector.
Thank you, Mark. Thank you very much for both commentaries. And given we have 5 minutes to finish this call, I will bring maybe the floor to the panelists, and maybe we can take 1 minute each one to try to make some final considerations and thoughts about what we. Or maybe we can start by Genial now.
Me?
Yes.
Okay. Nothing much to add, but just really to thank everyone for the thoughts and the inputs that have come here. We continue to still be expectant to have a very good result of the negotiations for the tax convention, despite the challenges and difficult issues that I know we are still addressing.
Thank you so much as well. I think in concluding, coming from the Global South, I would just like to say that currently we don't have a system that works. I think that should be very clear. That's why we're here. We are presented with the once in a lifetime opportunity to create something that works for everybody. On a not so light note, I wanted to share that the Zambian government is on record having said that we are experiencing a lot of losses in taxes because our revenue authority does not have the capacity to not only audit but also tax the mines adequately. I do not think that it's a capacity issue. I think the system is skewed in such a way that we are going to lose no matter what we do. So it's not a capacity issue at all. It's the fact that the system does not work, and that's why we're here. And it's important that whatever we do, we make sure that we come up with a system that actually works for us, that works for the next generations, that works for everybody. Thank you.
Yeah, thank you, everyone. I think the last comment is watch this space. We are working on a lot of very concrete proposals for how these issues can be addressed. For example, the issue of developing a polluter pays tax on the very large profits of fossil fuel companies. So this is the time to come up with these proposals. We will be bringing ours, and we certainly hope the member states will as well. Thank you.
Yeah, I would also just like to thank everybody for being here, particularly the delegates from countries and also from other organizations, and say that yeah, we are looking forward to negotiations and discussions, and we appreciate the opportunity to be here. Thank you.
Great. Thank you very much for to the panel. Thank you very much also, just to finalizing this meeting, I think on time. Yes, I will also thank you to Global Line for Tax Justice, the CSO mechanism for organizing this event, this meeting, and also thank you very much also to the all Tax Justice movement that is part of this hard work that we have been during the years to try to mobilize people for our countries to make more transparent and efficient and our tax systems that benefits for our society and our environmental climate. And also thank you very much for the distinguished delegates, authorities that was with us, and for here also our demands, our concerns, and what we are pushing for improve our this tax system globally. Thank you very much to all of you, and please give some air to the camera.